Good morning, everyone. Mike and Corey here. I'm back in the home office. We got three exciting topics today. I'm going to talk about what we went to. Steve and I were both at a conference at the end of last week, and some of the companies that we met with and concepts. And Corey's going to talk about market recovery after a geopolitical event, which we kind of had on Thursday, Friday of last week, the time to recover, and also the effects on the oil prices. So with that, this is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So last week, Steve and I were out at a CityWire event out in San Diego, and I'm going to show you just a picture of what that kind of looks like. Here's a picture. Steve's there on the right with the white Bitwise hat on, and I'm on the left paying close attention and taking notes like they taught me in college. I get to do it all over again. So you may wonder, like, what happens? Are those guys just out there enjoying the sun, working on their tan, living the San Diego life? I wish we were, but it's actually the June gloom in California, so we barely saw the sun. But what I will say is these events that we go to throughout the year are incredibly informative. Not all of them are sitting at a table like this going through this, but like what this presentation was how to run an RIA practice, how to run a wealth management business the most efficient way, which obviously is very good for Ankerstar Wealth. But some of the other topics that I got to sit in, and Steve and I were only in one or two sessions together. But one of them involved direct indexing, which is something Steve has mentioned, I know on shows before, which is a great alpha in your taxes. Other sessions I sat in, a company called Aledo, which does hedge funds. It's like a hedge fund of hedge funds where there's like 10 of them within one. Met with a company, Allianz, talking about some hedged portfolios, different ways to contain your upside and lower the risk of your downside. Talked with two different companies on international investments, which is something we're usually underweight, or we certainly have been underweight in the last year and a half, or probably the last 10 years. And typically that has been great to be underweight international, but the belief that some of that'll spread out beyond the Mag 7. And, of course, companies like Goldman Sachs, who I always love to meet, the people that we meet at these conferences are incredibly intelligent, explaining some very complex portfolio concepts. And it takes me a while, at least a couple times, to hear that so that I can at least explain it to others. And I'm not saying that I'm near to the level of depth as a Goldman Sachs, as far as that kind of concept. But it's what we do to try to learn so that we can apply this across all of our models, all of our portfolios, investment strategies, tax strategies, and as far as running the business strategies. So I just thought I'd cover that. Come back today, and I know we had a lot of geopolitical events. We had, Iran and Israel going at it Thursday, Friday. Markets sold off a little, and I say little because it went down. But actually, when I consider, the extent of the event, I actually was pleasantly surprised it didn't go down as, more than it did. And then I'm going to show you today's market, and look at this. Heavy in the green, over 1% up. And oil, and it says oil retreats as investors bet that Israel-Iran conflict will be contained. Maybe that's because we're already seeing Israel dominate the airspace. But as far as what I'm seeing in the news is there's still a lot of missiles flying. And if Russia, Ukraine, caused the markets to go down and eventually recover, and that event's still going on, Israel, Iran, I could see going on longer than that. I mean, it could take a while. So anyways, markets are up nice today, which perfect timing to lead into Corey's topic to talk about market recovery of geopolitical events.
Yeah, Mike, last week we looked at that line chart showing the S&P 500 over a long period of time compared to some of those geopolitical events taking place, and they gave you those little bubbles. This one takes away the S&P portion, uh, and it shows you the actual events, what dates they occurred, what the one-day reaction was, the total drawdown peak to trough, how many calendar days it took for the market to bottom after that event, and then how many days it took to recover. Of course, just thinking like a statistician a little bit, some of the sample sizes here are not quite what you'd want to see in every case. And also, there's multiple things going on in the market at any one time. So could be could be inflation, could be tariffs, could be any number of things that are overlapping with a geopolitical event, at one time. So just looking at the most recent one, an Iranian general killed in an airstrike on January 1st, 2020. You had a one-day reaction of minus 0.7%. And I think on Friday we ended down just more than 1%. They have total drawdown as really nothing because the following day the market recovered. And if we look at this event, which does involve Iranian personnel,
Generals.
what?
It's a bad day to be an Iranian general.
Yeah, it certainly was last week. It probably is a lot of days, honestly, to be bad. That's a bad position to be in. But this event will end up looking the exact same on this chart, where we saw about a 1% down move Friday, a total drawdown of nothing. Because, Mike, look at this. As you showed, the market's up big. The market has fully recovered already today.
Wow.
So full recovery is complete. And Mike, going back to this, you and I weren't alive for all these. Maybe you were alive for a couple more than me.
Just a
couple. Well, were there any, though, that stand out to you that were particularly notable or caught your attention at the time?
Well, of course, 9/11. I mean, that's kind of a defining event in my lifetime, born in '69. There's obviously other things that happened, but 9/11 is the big one. You can see the market dropped 4.9%, and if I remember correctly, I think it froze for a few days after that, but then only down 12% or 11.6%. And when I think of that, and I look at, there's only a few of them that are in double digits, greater than 10%. It kind of makes me think of like the tariffs that we talked about earlier this year and how much the market dropped on that. And the market dropped whatever 15%. The Nasdaq was down further. It's almost like something like tariffs, which is a financial threat, compared to a lot of these, which are more geopolitical threats. I mean, there's certainly a financial side to them as well. It just kind of amazes me that it's almost like the geopolitical isn't as important. I mean, it's obviously very important, but it doesn't cause the markets to go down as much. And from what we saw on Thursday, Friday, I think the markets realize that. So it dropped a couple percent, recovered today. So anyways, but 9/11 was the big one that I'll always remember so far.
That is a really insightful perspective there around geopolitical events potentially not carrying as much weight in the stock market as other things do. When the stock market is falling, like around tariffs, one of the questions to ask ourselves is, do we have the threat of a problem? Do we have fear? Or do we have an actual problem where the data is bad and it's getting worse? And in the case of this tariff thing, of whatever we're in, tariff war or whatever, trade war,
Tariff Mageddon.
Yeah. In that case, we haven't yet seen pain in a lot of data, other than some pull forward on orders and some slowing shipments from China. But just kind of more broadly, we have fear, but we don't have real problems yet. And it's hard for the market to stay down on just fear. The market can stay down on real problems, but fear is a fleeting thing. Okay, one last thing, talking about fear. Crude oil spiked up over 8% last Friday, and then it spiked up again, kind of, I think, in the overnight session, only to fall quickly back to $70 a barrel. As consumers, you probably like to see this a little bit. And, but again, as I mentioned in the show on Friday, anything in that $65 to $75 range is very normal pricing. Obviously, it's a commodity, it's going to move, but we're not really in a position where the price of oil at 75 or 70, or even if it goes back to 65, is really going to change things noticeably for consumers. It would take something out of that range. If oil gets to 50, people will feel it in a good way. If oil gets to 85, people will feel it in a more negative way. So, but for now, we're still in that range, comfortable range, normal range, and but we're seeing a lot of volatility. We're probably going to continue to do that. Countries are trying to figure out supply and what that looks like, and there's some unknowns given the geopolitical tensions. Anyway, Mike, that's about all I've got today. I can't believe we fully recovered already.
I know. Hey, I love it. A resilient market. We'll continue to report out. We'll see where this year goes. I think we're right around break even. Last I looked, I mean, break even. They're kind of where we started in January, which, considering where we were after the tariff announcement, feels pretty good to be where we are. So it's been a nice recovery. I'm looking forward to see where this market goes this year. So with that, we'll talk to you later.